Will China replace the US as a global superpower? And why I'm shorting this commodity. So I did this video, China's economic collapse at the end of last year, 2021. And in it, I shared that I don't believe China will become the next global superpower or the global reserve currency. And there's a number of reasons why I don't see it. China have a huge debt problem. They have got a huge real estate and debt problem in China, which makes the rest of the world look like prudent economic managers. And China's demographics, they peaked in 2011 and go down forever. And not just that, the urbanization, immigration, and look, globalization has peaked. Now we're moving into deglobalization. And so everything that's been a tailwind for China is starting to unwind. And in a lot of it, it reminds me of Japan. Japan, huge debt bubble, huge economic growth, buying real estate all around the world, aging demographics, and they peaked and they busted. And I see something very similar happening with China. Now, there's another reason why I believe they won't become the global superpower, and that is biblical. My understanding of Bible prophecy and revelation is that the US will be the global superpower in the end days, in the end times, and it won't be China. So that also gives me confidence knowing that they will not become that. Now, yes, the US is in decline in many aspects. If you listen to people like Stan Druckenmiller, real Bond King Jeff Gunlock, Felix Zulauf, a whole heap of people. Look, and even Ray Dalio, who does think China is going to replace the US, even he says the US is in decline. And these gentlemen I just mentioned, they say that the US will lose the global reserve status by the end of this decade. I think Stan is the furthest out of those gentlemen, 2035. And so, yes, that is happening. And as a Bible-believing Christian, I guess that's good news, because if my understanding of Bible prophecy is correct and the US is declining and is going to lose its global reserve status, then, yeah, what does that mean? That's good news for Bible-believing Christians. And even Michael Pettis is warning that China may well follow Japan's path of decades of slow growth. And let me just cut to a short clip from a CNBC interview with Steve Chavarone, who's a portfolio manager from last year.
Welcome to Trading Nation. I'm Seema Modi. Chinese stocks rallying to end the week, but one of our next guests warns that there are 3 risks facing the Chinese economy, what he calls China's Achilles heel. That reminds him of Japan's boom and bust cycle in the 1980s. Let's bring in Steve Chavarone of Federated Investors and Craig Johnson of Piper Sandler to discuss. Steve, why don't you break down some of the big risks you are seeing right now for China?
Yeah, I mean, these are long-term risks, but we think that they're extraordinarily significant. And the first one is they're the most rapidly aging country outside of Japan. And it's not just about the one China policy. It's about moving a whole group of folks from farms where you have a large number of children to cities where you tend to have fewer, women being more educated and therefore having fewer children, and also having an issue with immigration. At one point, 1.5 billion people, you'd need a lot of people to move into the country in order to kind of move the needle there. And so we think that that's number one. Number two, the manufacturing advantage is disappearing. Companies went to China for cheap labor, but manufacturing isn't as labor intensive as it used to be. And what you're left with is higher shipping costs and higher energy costs and a lack of intellectual property protections, which all make China less attractive than it was, let's say, a decade ago. And then finally, I think the brand of China has gotten hit over the last couple of years, whether it's intellectual property issues or a lack of transparency around the beginning of the pandemic or some of the unrest you see in Hong Kong, you have leaders in the developed world that are increasingly trying to create incentives for companies to come back to the home country and do less in China. And we think all three of those are in some ways reminiscent of what happened with China or Japan 20 years ago or so, or 30 years ago now. And we think really pressures Chinese growth in the long run.
Weak demand pushed China's steel price to the lowest level this year and stockpiles at factories to the highest in 2 years amid increasing downward pressure on the economy. And meanwhile, iron ore prices still remain highly elevated due to the expectation of a large construction-fueled stimulus coming out of China. And here is Macquarie Bank's take on commodities. Iron ore running out of time. Regarding China, without an improvement in finished steel demand, iron ore is in for an ugly turn at some point. We remain of the view that an effective stimulus will be hard to implement at the same time as maintaining the dynamic zero approach to the cerveza sickness. This is regarding China. So with all that in mind, this is a stock that I'm looking at shorting. No, I have not pulled the trigger. However, if you have a look at this graph, in 2021, I did short Fortescue Metals, and I do that in two ways. I buy just straight out put options and bear call spreads, and you can see when iron ore started crashing, I started buying those puts and bear call spreads on Fortescue Metals because there's always been a good correlation between Fortescue Metals and the iron ore price, and so that played out very well for me. Now, I haven't bought back into it on the way up. I just made those profits on those put options, and that's it. However, if it's true, and the market is expecting China to do a massive stimulus program, construction spend, which is going to create a whole heap of demand for iron ore, well, yeah, but if it's true that they're not going to do it, and we ultimately see a big crash in the iron ore price, I'm bullish a lot of commodities. Iron ore, I'm not as bullish on. In fact, at this price, I might even be bearish. And as you can see, in my opinion, Fortescue Metals is already overvalued based on the iron ore price. And so I think if the iron ore price does start to fall and the market wakes up and says, well, yeah, no, China's not going to do this big infrastructure spend, then Fortescue could fall quite a way. Now, this is not financial advice. I've traded using options, both selling options, selling covered calls, naked puts. I've bought leap options, bought put options. I've traded this thing each and every way you can think because it's got such a good correlation to the iron ore price, and I've done exceptionally well trading this. So yeah, it's this is one that I'm doing. Now, it was back around 2011, 2012, after I had sold my silver and then went to the US and started buying US real estate, that I came across this correlation between iron ore and Fortescue Metals. And so pretty much from this point in time, for the last decade, I've been trading this stock using, as I said, both on the sell side but also the buy side of options. Now, while I'm at it, I'll give you guys a few more stocks that I trade. Once again, not financial advice, and there's a lot of risk trading options. But alumina and the aluminium price, another one with really good correlation. So, I have quite a bit of experience in the commodity sector, and so I understand it and I follow it very closely. And these are stocks that I trade either when I want to get exposure to or when I want to short. So all these stocks, they run in cycles, and Oz Minerals is another one that seems to track the copper price really well. And so these are some stocks that I trade. And Woodside Petroleum, once again, another good correlation to the oil price. And back in March 2020, this was one that we shorted, also one that we bought leap options on, and it's been a stock that I've sold naked puts to buy into and write cover calls on. In fact, my largest premium I received was selling a naked put on BHP. Gee, it was a February. I remember the month was a February, but it was, I don't know, it was about 2015, 2016. Was when Fortescue fell to about $16, and I sold a naked put at about $14.90 and had a huge premium. Now, I didn't get exercise; it didn't fall below that strike price. I kind of wish it did, and got exercise because it ran up quite well. So these are just some of the stocks that I trade, that I sell options for premium, that I buy both leap options for the appreciation in price, and obviously the leap buys me time, so I've got that time to be right. It's just a long dated call option, really, more than 12 months, and yeah, buying puts, bear call spreads for shorting, because these things are cyclical. They can be quite volatile, so they do pay big premiums, but you can, you guys can see from the charts. So, so I don't believe China is going to replace the US as a global superpower. I don't believe that China, the yuan, will become the global reserve currency. The globe just won't trust it. Not with a communist regime in place that have very different laws and different values to the rest of the world. And, well, as I said, my understanding by Bible prophecy says that they will not be the global superpower and replace the US. And, well, here's some stocks that I'm shorting. Iron ore, Fortescue Metals, that's the big one that I'm looking at based on this China situation, and whether they do or do not do a big infrastructure play. And so I'm bearish China, I'm bearish iron ore, I'm bullish most other commodities at this point. Anyway, what do you guys think? Love to see your thoughts and opinions in the comments below. Do you think China will replace the US as a global superpower? Do you not? What do you think about these stocks? Once again, not financial advice, guys. Just wanted to share some information and share some things that I do and what I'll continue to do in the future. If you like this video, please hit that like button. Take care, everyone, and I'll see you all again on another episode of Finance Uncut.